Okay. All right, so now I'm going to come back to Zoom. And there are a couple of people in the meeting room, so I'm going to let them in. Right, so I'm going to mute everyone. Nice, so everyone is on mute. Right, okay. All right, I'm going to remove the waiting room so I don't have to keep letting everyone in. So hopefully there are no weirdos. Okay. Okay, I think, all right, everybody's coming in now. And I'm just going to check to see whether it's streaming properly. All right, fantastic. Yes, we are. Okay, so welcome, HCJ.tax, member of Moore's Rule in Asia Pacific. So today we are having yet another live stream. We do these live streams every week. Please feel free to visit our website, which is hcj.tax, and click on events, and you can see what we're going to do next week. So we do this every week, so feel free to join us. Please keep in mind that this is being recorded. So if you're with us on Zoom and you do not wish your image to be captured, all you need to do is keep your camera switched off. Otherwise, it will be recorded. So this is going to be recorded, and it's going to be made available on various platforms, including YouTube, our Facebook page, our website, hcj.tax, SoundCloud, Spotify, iTunes, wherever you get your favorite podcasts, you're going to find this live stream. It's going to be recorded there. So if some of your colleagues and friends can make it, you can point them in that direction. So, okay, so today we're going to talk about taxes for digital nomads in Bali. And we have with us Diki Damwari, who is our expert. He is the head of tax at Moore's Rowland in Indonesia. Those who are not familiar with Moore's Rowland, and it's a global accounting network. In Asia, we probably have over 30 offices in, I think, 13 countries by now. So as far north as Tokyo and Beijing, all the way down to Sydney and Melbourne in Australia. And Diki sits in Indonesia, in Jakarta. Moore's Rowland also has an office in Bali. So there's a satellite office in Bali. Moore's Rowland is the 4th largest accounting firm in Indonesia. So it's one of the big 10, one of the big 4. So do keep in mind, however, that we are not giving advice, terms of license and stuff like that. So we're having a general conversation about general principles. And what we're hoping is at the end of this conversation, you'll be equipped with the tools and an appreciation of the issues that you need to take to your preferred advisory team. But this is not meant to be advice where you take notes and then you run off and do what we say. That doesn't work that way. There's no way we can understand your situation inside out in the limited time that we have available today. So, without further ado, I will ask Diki to introduce himself, and then we have a series of questions and answers, a Q&A kind of session. Some of you did submit your questions in advance. Thank you for that. We will try to attack them in the order in which we received them. If you didn't get to submit your question in advance, or you just forgot or whatever, feel free to type in the box below. So if you're on Zoom, you can type in the chat box below. If you're on Facebook or one of the other platforms that this is being streamed onto, just type below and we'll get to them in the order in which they are received. So, Diki, please introduce yourself. You just need to unmute yourself first. Sorry, Diki is still muted. You'll need to unmute yourself. Sorry.
It's okay. Okay, good afternoon, ladies and gentlemen. I'm glad to see you online virtually here. We've done this a couple of times already. It's been 2 years with Darren. Yeah, so basically we discussed about digital nomads in Indonesia from the tax point of view of Indonesia tax regulations. So I hope that after these discussions, it might be clearer for you to have business in Indonesia, or to have friends who wants to do business in Indonesia. You can refer them to us.
All right, wonderful. Okay, so we're going to jump right in. So again, we received you. If you sent it via email, yes, we got it. Sorry, I didn't get a chance to acknowledge each and every one, but we got your emails, definitely. But if it is that you have additional questions or you didn't get to email it, type in the box below. So let's go. Question number one, how does someone become tax resident in Indonesia? What triggers tax residence? Dickie.
Yeah, an Indonesian tax resident is defined as individual who is an Indonesian citizen, yeah, or a foreigner who resides in Indonesia for more than 133 days within any 12 months period, or the foreigner present in Indonesia during a tax year with the intention to reside in Indonesia.
Okay, gotcha. So just basically, I mean, the 183-day rule, I think people who are remote workers, they're international investors are familiar with the 183-day rule. So, but in Indonesia, if I'm understanding you correctly, right? So if it is that you get a work permit in advance and then or long stay permit, however it is under the immigration rules, because obviously there's several visas with which you can enter Indonesia. But if you come in with a residence visa, including a work permit, your tax residence starts when you land, correct? Am I correct in saying that?
Yes,
right.
Correct. Correct.
And then otherwise, like if you come in visa on arrival, you come in as a tourist or whatever, then you have to do 183 days in a calendar year. And just to kind of go ahead.
Yeah, or after you 1 month you stay here and then you fall in love and you have intention to stay here, then you can register to the local tax office.
Okay, wonderful. I know people like to talk about visa runs, but we're just making it clear, visa runs really don't work. It may work from an immigration perspective, potentially, but from a tax perspective, which is what we're talking about, here today, it does not work because the clock does not reset, because it's 183 days within a calendar year. So the clock keeps ticking as you leave and you enter again. It continues. So hope that helps whoever asked that question. The next question is number 2. How does this is a popular one, and we discussed this a lot. How does a foreigner in Indonesia, someone who's not an Indonesian citizen, how do they get to exclude their foreign income when they're tax resident in Indonesia? Dickie.
Okay, so there's a new regulations. We call it Omnibus Law, published about last year, November last year. So Indonesia has made a territorial income tax for expatriates. Okay, but it has certain limits, certain limits. Number 1, have certain skills. Okay, and the certain skills is only comprised of 25 types of professions. So it's very specific professions, and mainly of the profession is, I will read it for you. For example, chemists, geologists, biologists, system analysts, software developer, mining supervisor, process control technicians, air traffic safety, electronic device technician, electrical engineer. So it's very kind of not a finance guy. They're going to free, but it's very specific knowledge that the expatriate, the foreigners can transfer the knowledge to the Indonesians.
Yeah,
that's the skills, the certain skills. And number 2, if you have the certain skills and the territorial income tax only valid for 4 tax years, since your first coming to Indonesia. Okay, so in 2016, you come to Indonesia for 3 years, then these exceptions for withholding income for overseas income exclusions only left for 1 year.
Okay.
Yeah.
Right.
So there is only certain skills, and it is not last forever. It is only 4 years since you first come to Indonesia.
Right. And, you know, I'm glad that you're shedding some light on this, because, you know, I've seen some people kind of misunderstand this online, and unfortunately they spread a perspective that may not technically be correct. So this is good. So it's very specific in terms of the professions. And of course, implicit in that, you need to register, right? Yeah. So you'd need to register, and probably your certifications or your credentials would need to be vetted. Yeah. And then you'll get permission to exclude the income that arises outside. Yeah. So it's not automatic. It's not, you know, you can't assume I just landed in Indonesia, I just landed in Bali, so I'm going to enjoy this. No, you need to go through the steps properly.
Yes.
Okay. Thank you very much for clearing that up. And moving on, number 3, when are tax returns due for those who are tax resident in Indonesia?
End of March.
End of March, right? So we're late if somebody hasn't done it as yet. They're already late. So what if somebody is late? You know, let's throw that out there. So how, you know, are there like any, you can seek an extension like in some of the jurisdictions? Is there like in some of the jurisdictions there'll be reasonable cause where you can avoid penalties and interest if you have a valid reason for being late? What can we do if we're late?
For individual, no. There's no extensions. Just if you're late, then you only got charged for 1 million rupiah, the penalty.
Okay. And is there interest as well, or just a penalty?
If you have underpayment, in case you're underpayment income tax, then there is tax penalty 1% per month.
Okay, so penalties and interest. Okay, so the key point is you need to get this done as soon as possible. All right, gotcha. All right, number 4. Okay, termination of residence. So like when someone decides, you know, I've had a good time in Bali, I've been here for a few years or whatever, so it's time for me to move on. I'm going to move on to Singapore, to Thailand, or whatever. How do they sever tax residency with Indonesia? How do they let the tax office know, hey, I'm on my way out?
So let's assume this guy is compliant with the tax. So they report annual income tax every year, and in the middle of the year they want to get out forever from Indonesia. So they have to send a letter to tax office for revocation for the tax ID. And then the tax office will process that applications for within a year by doing a tax audit. So you will be taxed, but you basically the foreigner always use tax consultant to do this, because they already left the country. You should left the country and get exit permit only. Based on the exit permit only, we file in the applications for the revocation.
Right. Okay. So it's not too dissimilar to Singapore, where I'm based. So when you seek to exit, you need to, well, with your employer or whatever, you let the tax office know that, hey, I'm leaving, and they would initiate certain steps. So you can, you know, you could settle whatever tax liabilities you may or may not have, and you can leave on a good note. So you'll have no problems if you ever try to come in, because we have had clients that unfortunately didn't do things the right way, and, you know, in certain jurisdictions, and they are not allowed to ever return. So we do not advise anyone to burn any bridges. You never know what's going to happen. So when you're exiting, you need to exit in the right way. So I got you. Okay. Next question. Okay, is there any communication between the immigration authorities and the tax authorities in Bali and Indonesia? Do they talk to each other?
In practice, I didn't see it.
Mhm.
In practice yet, I didn't see it yet because, but for certain
Mhm.
big amounts of
Mhm.
tax due, yeah. So
Yeah.
if you have big amount of tax due, then
Mhm.
for sure the tax office send formal letter to the immigration so that
Yeah.
you cannot leave the country.
Mhm. Yeah, yeah. Right. And so so I get what you're saying, that if the amount is big, or alternatively, if you're a high profile personality, and we
Yeah.
saw that a couple of years ago with a digital nomad from the US, a young lady who was based in Bali, and she was saying whatever she was saying online, no judgment. She was doing whatever she was doing online, and it invited and attracted negative attention. And then in that case, the immigration team did speak to the tax team, and they were of the opinion that since she was earning money, even though it's remote and it's online, the point is the economic activity was happening in
Yes.
Bali, and therefore she is in breach of whatever immigration rules she was there on, and she was also in breach of the tax rules. But yeah, so they do speak to each other when they need to, but
Yeah.
ordinarily not
No.
exactly.
No.
Okay, gotcha. Okay, so scrolling down. Okay, I'm going to another screen now to see what's next. All right. Crypto. Crypto is, of course, a super popular topic among the remote worker, digital nomad, international investor community. So in Indonesia, is crypto considered money or currency?
Okay. So
Yeah.
currently, just a couple of weeks ago, the Minister of Finance
Mhm.
published a new regulation about
Mhm.
crypto asset.
Yeah.
So so I can definitely say, is
Yeah.
crypto money? No. It is not a legal payment instrument in Indonesia.
Right. So it's not. So in other words, is it like in other jurisdictions that we're more familiar with, like the UK and the US and Australia? Is it a commodity?
Yes, it is a commodity.
Okay, gotcha. So I guess those sorts of rules that apply.
Yeah.
And so under what conditions, generally speaking, would a transaction involving crypto be taxable, generally speaking?
They regulate on
Mhm.
the transactions of the
Mhm.
crypto, selling, buying,
Mhm.
and then
Mhm.
also mining.
Mining. Okay.
Yeah.
So as you mentioned mining, how is mining taxed in Indonesia?
I read the regulation. It's still unclear whether
Okay. Mhm.
the writer of the regulation understand how the mining, how the stacking, right?
Yeah.
Understand how the process will be.
Right.
But we got to be conservative. So
Mhm.
if you do mining, then it's a big chance you will become fatable entrepreneurs.
Okay. So it would attract both VAT, which is the indirect tax or sales tax as it's called in other jurisdiction. So it's VAT as well as
The income
ordinary
tax.
tax, as well as income tax. So both
Yeah.
direct and indirect in taxes.
Yeah.
So
Yeah.
I think we get the direct taxes because it's quite common in other jurisdictions that staking and mining is taxed. You pay it as part of your income tax, or if you do it through a company as part of your corporation tax. But could you tell us a bit more about the VAT implications,
So
please?
the rate for the VAT is quite low. It's only
Okay.
1.1%
Mm-hmm.
from the value.
Okay.
Okay, it's quite low. And for the income tax,
Mm-hmm.
it's a final income tax 0.1%. It's final. It means it doesn't need to be sum up with other income. It's final, 0.1%.
Is there like a threshold, like in Singapore, for example, there's a threshold, and if your income is below, the income being generated is below such a threshold, it won't be subject to the equivalent to VAT in Singapore, which is GST. So is there a threshold in Indonesia? Or?
In general, for vetable entrepreneur, there is a threshold, 4.8 billion rupiah.
Okay, 4.8 billion. So anything below that threshold, no VAT.
No VAT.
Okay, gotcha.
No VAT. Yeah. However, we do the tradings on Bitcoins, on whatever coins through the exchangers, right?
Yeah.
So the exchangers will charge us with the VAT and withhold the final income tax from the seller. So I think it will be automatically charged to the customer, to you.
Right. Yeah. So that's assuming, of course, that the exchange is in Indonesia.
Yeah. If the exchange not in Indonesia, they already stated the tariff, the tax rate is different twice. It's twice higher with VAT, and with the income tax it's twice higher.
Wow.
But the problem is how they going to chase the exchanges outside there, right? So that
was my question.
Yeah. So they will like e-commerce, e-commerce VAT collector. So the tax office will state it by their own discretion that, okay, Google, since you are selling to Indonesians, so I stipulated that you become the VAT collector and have to pay, and they will get the tax ID number.
Okay, so in other words, there's any exchange, for example, lots of exchanges in Singapore or the US or Australia or whatever. If it is that they have, I guess, people who are based in Indonesia, based in Bali, and they are actively doing stuff through the exchanges, the right thing for them to do, once they know, I guess they have to figure out that their investors or whoever are Indonesian tax resident.
Yes.
They need to register with the tax office in Indonesia.
Yes. Voluntary can.
Yeah.
If they voluntarily want to, then they just send a letter, and tax office will review whether the transactions is quite big for Indonesian customer. Then they will issue the tax ID for the exchanger.
Okay, understood. And like in the US, right? In the US, crypto to crypto, so like Bitcoin to ETH or Litecoin, those crypto to crypto transactions are taxable. Is it the same in Indonesia? Crypto to crypto?
Same. Is we call it swap here. They call it is this a swap? Then seller and buyer will have to pay VAT, and the seller will have to pay the final income tax.
Wow. Okay. And generally speaking, is there a distinction between capital gains taxes and just like trading or ordinary income tax? In some jurisdictions, like in Singapore, they're treated differently, or they're treated the same in Indonesia.
Okay, differently. So capital gain tax, so it depends on the asset.
Okay.
So if you are selling the shares from the stock exchange, from Indonesia Stock Exchange, it will, they want the tax treatment is final income tax from the amount of sale. Okay, so they don't care whether you gain or loss, you have to pay tax. Okay.
But they're taxed at different rates.
No, single rate, 0.1%.
Wow.
0.1%. So I guess you want to invest here. It's very low tax and it's final, but it's the same when you take it to US, then you have to progressive tax rate, right?
Right. Yeah. So okay. So this is an important point. Single rate. So there's no separate tax rate for capital gains and ordinary income. If you make money on crypto, aren't you being taxed at your marginal tax rate, whatever that may be? Or
No,
it's a flat
it's
rate?
final. It's a flat rate. Means final is no need to combine with your other income.
Oh wow, that is potentially quite attractive, right?
Yeah.
So is it like the government is deliberately trying to encourage the whole crypto economy?
Yeah, I think so because
Yeah.
it's going bigger and bigger,
Yeah.
and they don't pay a tax until now.
Hmm. Okay. All right. Good to know. Okay, I'm going through another question that was submitted. All right. So the person is writing, "Hi there. First of all, thanks for taking the time. Blah blah blah. Indonesia is really hard to understand with all the laws changing often and with dubious interpretations." I'm just reading this person's opinion. I'm not judging. Yeah. Okay. So my question is around a concrete structure that I've been using while a resident of the UAE. So this person was in the United Arab Emirates. Now he or she is saying, "I'm in Bali and I like Bali. Everybody likes Bali, of course, and they want to remain there permanently." So again, someone has moved from the United Arab Emirates to Bali, and they're liking it. So they have a structure where they're 100% owner of a US LLC, and they run an IT consulting business through this LLC, and they bank the clients. So I guess the banking is in the United States. Their clients are in Singapore and the UK. And they're talking about that when they were in the United Arab Emirates, there were no tax returns, which is, yeah. So in just provide context, once you are in the UAE, you only pay taxes and stuff if you do business domestically. Then you need to register for VAT and whatever. But if you just do international business like this person is, correct, then no taxes at all. So anyway, so this person is here in Bali, running a business, an LLC in the US, clients in the UK and Singapore, and they're considering getting an investor Kitas, a C314 in Indonesia as a non-executive shareholder in a PTPMA. So the question is, after all of that, given that structure, what are the options to optimize tax liability in Indonesia? Is it possible? Blah, 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 blah. Okay.
It
So
depends.
it depends. Yeah, the answer is always it depends. But what struck me is that this person is a consultant, right? So chances are it is like a single member LLC, as we say in US terms. So the point is that management and control, those two tests, management and control are being exercised from Indonesia.
Yeah.
So this company should be taxable to Indonesia.
Yeah.
In the first place. So I'm glad that this person is thinking of doing the right thing, which is registering for Kitas and whatever. So you're correct. This person is correct. You need to register a business in Indonesia because you're running a business from Indonesia. You get your PTPMA set up, and then I guess you can be an employee of that PTPMA. So you pay taxes. Whatever's left inside will be paying corporate taxes. So yeah, I think this person is on the right path. What do you say about that, Dickie? This person's on the right path, yeah.
Yeah. So dividends right now, dividends. You are an individual and you get dividends from the company.
Mm-hmm.
It might be 0% tax on dividends.
Right.
If the dividends you invest in again to the companies, or to you buy bonds in Indonesia, or you buy shares on the stock exchange. So if you invest again in Indonesia, then will be 0% tax.
Right. So this is good. So this is a good planning opportunity, right? So in terms of legitimate tax planning, if it is the profits are reinvested into Indonesia, you can relieve yourself of the dividend taxes. Oh, is it relief or is it deferred? So at some point in time.
So not the profit, Darren. It's dividend.
Yeah. Oh, the dividends. Okay.
Dividend, not the profit.
Yeah.
Okay. So
okay. Right. So okay, let me just make sure I got this right. So this person is going to be in a Kita, so they need to pay themselves a salary.
Yeah.
Right. And that salary will be taxable.
Yeah.
That's their income tax. And then they have a company, the PTPMA. So the PTPMA will pay the corporate taxes, whatever that would be.
Yeah.
Right. So then ordinarily, when they pull the dividends out, that will be taxable as well.
Yes. Yeah.
But they can avail themselves of a planning opportunity.
Yeah. Yes.
And they can invest that in certain, like in bonds and certain instruments.
Yeah. Partially can. Yeah. Partially also can.
Partially. Okay. And okay, so a question would be, when they eventually liquidate that investment, so they redeem the bonds or whatever.
Oh, okay. So it has to hold there for 3 years.
Okay, so there's a minimum holding period, so 3 years.
Yeah.
And then after 3 years, is it tax-free?
Yes, it's tax-free.
Fantastic. So that's a great tax planning opportunity. So whoever wrote that question, I'm not going to call your name, you know who you are. I hope that helps. And if you want to operationalize that, you feel free to reach out to Dickie directly.
Okay. I will be happy to help.
All right. Next question. So someone is asking here in Zoom, can you confirm that the final income tax on a crypto transaction sold through an Indonesian exchange is the same rate as the sale of a share in a listed company, namely 0.1% of the sale? Dickie?
Sold through an Indonesian exchange. Okay.
Yeah.
I can confirm that if the exchange have made the systems to withhold the final income tax. Okay, so it is not us, the seller, to pay directly to the tax office. Hey, I have selling the crypto. No, it should be the withholder. The withholder will be the exchangers to withhold.
Okay. So this person needs to, touch base with the actual exchange, the crypto exchange, and make sure that they are doing the right thing and they're going to withhold.
Yes.
And then it'll be fine.
Yeah.
Okay.
Right.
Gotcha. Okay. I hope that answers.
And this regulation, this regulation will become effective on May 1st. Yeah.
Okay. So not yet. Okay.
Not yet. Yeah.
So, I mean, May is soon, but in the interim, if they sell in the interim, what should they do before May 1st?
No, it's self-assessment. So so
they need to declare.
Since it is you should need to declare and pay capital gain tax then. So if you treat it as a capital gain, then the tax rate will be progressive.
Okay, gotcha. Okay, James, hope that answers your question. Moving on. Okay, somebody's asking, okay, in terms of tracking their trade, so this is assuming that it's not an Indonesian crypto exchange, if it's one of the others outside. And assuming, of course, that they didn't register with Indonesia, so there's no withholding. So then when this person is self-reporting, do they need to track every buy and sell, or can they use averages? Can they use average, or do they use FIFO or LIFO or HIFO? Last in, first out, first in, first out, highest in, first out. How do they track? What's the right thing to do?
Okay, currently is still unclear. They not regulate so detailed like that. Yeah, even I still imagine how this 0.2% for the overseas exchanger, how they can withhold this 0.2%. Right? So because the overseas exchangers has to wait until they get approval to get tax ID from Indonesian tax office, so that they might able to withhold the 0.2%. Otherwise, how they can withhold, right? So it's still unclear now.
Okay, so things are still unclear, but depending on what jurisdiction that the person who's asking may also be exposed to, I guess they also need to be conscious of what the rules are there, and and make sure that when they do their taxes, that they're not going to be taxed twice, because if there's proper offset. So Indonesia, generally they recognize foreign tax credits, correct? So if it's being taxed somewhere else, right? But in order to avail yourself of those foreign tax credits, how do you do that? Is it just filling out a form, self-assessment, or do you need to show evidence that it was paid like a a bank transfer or something that evidences that that tax was actually paid?
Yeah, for the submissions of annual income tax return, you just need to fill in the form.
Okay, so no
Yeah.
proof, just fill in the form. Okay.
Yeah, but you have to keep the proof. If one day the tax office asks you.
Right. Okay. That's interesting. That's good to know. Okay. All right. And people are asking about staking and stuff like that. So again, we're saying, just to repeat what you said earlier, the rules is as yet unclear on that. But taking a conservative position, you're making money, you have an income, so the conservative right thing to do is declare it, right? Yeah. And pay taxes on it. Okay. Right. Okay. Right. And someone is asking, well, yeah, if it is, you've answered this question already. If you use an exchange in Singapore, yeah, again, the process is the same. That exchange in Singapore, if they have Indonesian clients, they should have registered with Indonesia, doing the right thing. Otherwise, you would need, self-assessment. You need to declare it yourself, because once you're tax resident in Indonesia, ordinarily you're going to pay taxes on your worldwide income.
Yeah.
So, okay. All right, great. Any other questions? I'm just going to check on some of the other platforms to see if anybody else is asking any questions. Nope, nothing on Facebook. Okay, great. Any other questions from you guys back here in Zoom land? Any other questions? Or have we answered all of your questions here today? Okay. Okay, great. I think that's all the questions for today. That's great. So, Dickie, if someone wants to reach out to your team, either the satellite office in Bali or the main office in Jakarta, what's the best way to find you guys?
You can search my name or mooseroland.com. Yeah, okay. In the chat box, there is my LinkedIn.
Yeah. Okay, yeah. So you can reach out to Dickie directly. He's available. He's reachable on LinkedIn. So it's Dickie, DICKY DARMAWI. So you can do a search for him on LinkedIn. You could message him directly. Otherwise, you can go to Moors Roland main Indonesia website, which is I think it's moors-roland.com.
Yes, correct.
Okay, so it's Moors, that's MOORES Roland, ROWLAND.com. That's the main website. And you can use the contact form, and the right member of the team will get back to you if you have any questions. Otherwise, I'm HCJ.tax, and you can reach us on our website. We do live streams every week where we answer questions about doing taxes the right way when you're working internationally. My name is Darren Joseph. Thank you for joining us, and we will see you next time.
Bye. Thank you.
Bye. So I'll turn it off.